Ladies and gentlemen, good day and welcome to Sky Gold and Diamonds Limited Q1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Vidhi Vasa. Thank you, and over to you, ma'am.
Thank you. On behalf of MUFG and Time, I welcome you all to Sky Gold and Diamonds Limited Q1 FY26 earnings conference call. On the management side, we have Mr. Mangesh Chauhan, Managing Director and Chief Financial Officer, Mr. Siddharth Sapani, Group Finance Controller, and Mrs. Nikita Jain, Company Secretary. I hope everyone had an opportunity to go through our investor deck that we have uploaded on Exchange and the company's website. I would like to mention a short disclaimer before we begin the call. This call may contain some of the forward-looking statements which are completely based upon our beliefs, opinion, and expectations as of today. These statements are not a guarantee of our future performance and involve unforeseen risks and uncertainties. With this, now I hand over the call to Mr. Mangesh Chauhan. Over to you, sir.
Thank you so much. Good morning, everyone. Thank you for joining us today as we are discussing our Q1 FY26 financial performance. We have commenced the quarter on a strong note. Despite persistent fluctuation in gold prices, our Akshaya Tritiya sales performed exceptionally well, demonstrating significant growth. At Sky Gold, we remain steadfast on our vision to become one of the largest B2B gold jewelry manufacturers in our segment. Our specialization in lightweight jewelry serves as a strategic differentiator, especially relevant in today's fluctuating gold market. The Indian fine jewelry sector is seeing accelerated growth, fueled by surging gold rates, the emergence of women as primary buyers, and growing inclination towards sleek design forward pieces suited for modern lifestyles. We have transited from a volume-based approach focused on generic design to a more design-led model emphasizing craftsmanship and complexity. This exclusion enables us to produce jewelry that's both lightweight and structural robust, perfectly catering to today's customers who seek durability and elegance amid fluctuating gold prices. In response to this market dynamics and to cater to evolving consumer preferences, we are also observing an increasing trend to customers' inclination towards 18-karat jewelry. Further, few customers are also open to test 14-karat jewelry due to high gold prices, and industries adopting to a new hallmarking rule for 9-karat jewelry. As we progress on our growth journey, the successful onboarding of our new large client like Reliance Jewelry demonstrates our capability to manage premium large-scale products with excellence and significantly expand our customer reach. Now, I would like to highlight some of our recent company updates. New client additions: we have successfully onboarded Reliance Retail, PMJ Jewelry Hyderabad, and Kalamandir, which has strengthened our presence across diversified and fast-growing major jewelry retailers. Additionally, our wallet share is increasing with Aditya Birla, CaratLane, and PN Gadgil, further enhancing our footprints among prominent and rapidly expanding jewelry retail chains. Focus on advanced gold customers: we are actively targeting new customers additions through the advanced gold model, and we anticipate a further increase in wallet share from our existing advanced gold clients. The model is expected to enhance PAT and improve ROCE. Sky Gold and Diamond plans to optimize working capital by strategically implementing the advanced gold model across its customer base. Acquisition of a wholly owned subsidiary in Dubai, UAE. Sky Gold and Diamond plans to acquire a newly incorporated entity in Dubai, UAE for a nominal amount of 12 lakh rupees. This is to strengthen its exports to the Middle East, as we identified this region as a strategic growth market and plan to open a sales office there. This is in addition to our recently opened office in Kerala, owing to a strong demand for high quality jewelry, particularly in Dubai. Focus on gold metal loan. We have successfully secured gold metal loan limits from 3 existing bankers. Gold metal loans provide lower cost financing, thereby substituting high cost working capital facility and offer gold manufacturers raw material upfront, which improves cash flow and production cycles. From June and early July, GML rates have now started cool off to around sub 4% from the high of couple of quarters back. We are on track to gradually shift our borrowings to GML loans. Market dynamics during Q1 FY26. The Indian jewelry market in Q1 FY26 has experienced mixed trend due to gold price volatility, particularly sharp increasing from May to mid-June. Softened customer movement after a strong executive period. Despite this, festival-driven demand and continued expansion effort by organized players have fueled growth. There is also a noticeable consumer shift towards lightweight, lower carat and studded jewelry, with strong and sustainable growth projected from organized sector. Now I will discuss our Q1 operational highlights. This quarter, our monthly production volume was average 456 kg per month, up subsequently from 349 kg per month from last year, making a robust 30% growth year on year. Exports continue to make healthy contributions with sales reaching approximately 131 crores, which is 12% of total revenue. The consolidated revenue for the quarter stood at 1131 crores versus 723 crores in Q1 FY25, thus registering a growth of 56% on year-on-year basis. The gross margins were 8% compared to 6.5% on Q1 25, an improvement of 163 basis points, mainly on account of increase in advanced gold volume from 4% to 5% quarter on quarter. Further, our 18 karat volumes has increased from 4% to 7% in current quarter. Further, we launched lightweight feather-light jewelry designs in 22 karat, which has led to improvement in our margins. EBITDA for the quarter was 71 crores compared to 37 crores in Q1 FY25, showing a growth of 91%. EBITDA margin for the quarter stood 6.3% as compared to 5.2% in Q1 FY25, improved by 115 basis on a year-on-year basis. PAT for the quarter stood at 43 crores as compared to 21 crores in Q1 25. PAT margins for the quarter stood at 3.9% as compared to 2.9% in Q1 FY25, hence improving 92 basis on year-on-year basis. With our robust profitability, a strategic move towards advanced gold consumer GML, we are expecting moderation in our working capital cycle in coming quarters, on track for working days of 52 to 55 days in FY27, with target revenues of 5,400 crores in current financial year and 7,600 crores in FY27. Now I request the moderator to open the floor for questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Chandan Mishra from Finvestors. Please go ahead.
Morning, sir. First of all, congratulations on posting good day.
Good morning.
Sir, first question is regarding export opportunity. As India-UK trade deal is signed and the jewelry sector having zero tariff, are we eyeing the UK market for opportunity?
So again, yes, there is a good news from the government that UK market, UK has done a deal with India and they have done a duty-free export. We can export from India and they have done duty-free. So we are right now not in the products of UK and Europe type products, European products. We are into Asian products which suits to UAE countries or Singapore or Malaysia. Those who are stored in Singapore, Malaysia and UAE, and the buyers are like Sri Lankan, Pakistani, Bangladeshi, Indians and all. Those are also modern jewelry, but they suit to Asian customers. So in future we might be planning, because UK has opened the market and now only the news has came, but it will take time us to produce a product like European style. Yeah.
Sir, my next question is, sir, if you please give me an update on Ganna and gold acquisition, is it completed?
That is in process and will be completed in the last 7 to 10 days pending.
Pardon, sir.
Pending. Yeah.
How much pending?
7 to 10 days work is pending. Yeah. Approvals we have got from the board NSE, BSE, but 7 to 10 days of process is pending. Documentation.
Okay, sir. Sir, my next question is related to volume, sir. What is current volume of export order which we started as 60 kg per month? Have we increased our volume as that we have targeted for 200 kg per month by year end?
So, yeah, so we are opening an office in UAE for that only because of the rate difference in the UAE and in India, we get a premium rate for the export gold. That's why we are opening office there. So we are little bit 15 days work is pending for the paperwork and all. And so approximately 1st August or 10 August, we will open the office and we will start distributing that order also. So already we have distributed the order of exports 40 kg already we have distributed in this quarter.
Okay, sure, sir. One more question, sir. We have planned to exit FY26 run rate around 650 to 700 kg per month in volume. And currently we are at approx 456 kg after Q1. Are we on track to achieve the target?
Yeah. We are done 450 kg per month. Next quarter we are approximately expecting 580 or something. In the third quarter 630 and last quarter 650 will be at 650 kg last quarter. So earlier quarter you can see we grow every quarter gradually, and this way we will grow in this year also.
Sir, I have few more questions. If you permit, I can ask or I may go in line.
I think again you can click, somebody can ask, and again you can come after 15-20 minutes if you are okay.
Okay, sure, sir. I will go in. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your question to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question comes from the line of Angad Katdare from Samiksha Capital. Please go ahead.
Thank you for the opportunity. Good set of numbers. My first question is, can you just provide a breakup of your sales based on carat?
Yeah, we have 18 carat is approximately 7%. No, 7% is 18 carat. 87% is 22 carat. 5% is job work, and studded is 0.7. So we have gained the shares in 18 carat from 4% to 7% year on year, and 87% is 22 carat. And job work we have reached 5%, which was 4% before this quarter. And studded is just 0.7 because we are in between 0.7 to 1%.
Thank you. So my next question is on our gross margin. We in this quarter we have reported around 8% gross margin on Concall basis. How much is due to the gold price increase?
So we are totally hedged in the inventory base and sale and purchase. There is no gain of the gold price in this. Already we have gained some our sale of 18 carat has increased. That's why we have increased our margin also. Again, instead of that, we have launched lightweight featherlight new verticals and designs in this quarter in 22 carat. This led us to improve our margins. So there is no gain in the inventory or loss also we will not have because we are hedged by the inventory and we are our sale and purchase are also hedged.
Great to know that. So my final question is on our net asset turn. I was looking at our FY25 numbers. Our net asset turn is far superior when I compare it to our peers who have in the range of I think 20-30x. We are in north of 90-100x. How do you think this trend will sustain going forward for us on a net asset turn basis?
I think we can come back to you because I have to check this one. Yeah. So, can you come back with this? I will.
Thank you, Angad sir. May we request you to return to the question queue for the follow-up question?
Sure. Thanks.
Thank you. The next question comes from the line of Palash Kavle from Nuvama Wealth. Please go ahead.
Yeah, thank you for the opportunity, and congratulations on the good set of results, sir. So, when do you see this CaratLane and Aditya Birla business picking up and contributing well to the overall business?
Already CaratLane business is picking. That's why we came at 5% from 2% to 5%. And Aditya Birla and Reliance are about to start the orders. So this quarter, August and September, we'll be supplying to Aditya Birla and Reliance both. So this will also add into job work percentage. So because of CaratLane, we are increasing our job work percentage. It came to 5%, which where we are at 1 or 2%. And now if the Reliance and Aditya Birla will join, we are targeting 7.5% in this year.
So this means that there's still some scope for margin expansion for this year, right, on gross levels? Because contribution to increase.
Yeah.
And so what is the limit of gold metal loan that you have secured from the 3 banks? What is the amount?
So already 3 banks we have secured approximately 190 crore or something. 180-90 crore we have secured the gold metal loan. So from this quarter only we have started using. I think 20% we will use this quarter and balance 20% in the next quarter, and we'll be at March quarter 70% or 75% odd. So successfully we have got the limits from all the bankers, and we are starting the use.
Okay. And so what is the inventory and receivable days for you after the Q1 quarter end?
So again, successfully we have reduced our debtor days from 38 to 32 days, which was shoot up in the last quarter. So we have reduced our debtor days successfully. Our inventory days is little bit higher because we have made the orders for Dubai office, which were going to dispatch little bit. It got later to because of the paperwork of the Dubai office, it got shifted in 1 month because which was going to shift in June quarter. So we are shipping. We'll be shipping right now in 10 days or something. So inventories were that's why a little bit higher. Some dispatches of June also happening now in July because June gold rates were higher. So again, we have successfully reduced our debtor days, and inventory days will be diluted as our Dubai office also will open, and July also dispatches are going on.
Okay, that's really helpful, sir. So my next question is on demand. You said that the gold price increase has affected the demand. So, the growth which you have guided for this year, will it come from the new plant or the wallet share gain and demand gains would also contribute to it for the FY26?
We are majorly relying on the existing client because we have given the guidance on the major dependency on the existing large corporate, mid corporate, small corporate. So their stores are opening because they have already announced the store of this year coming. This financial year, somebody has opened 80 stores, somebody opening 100 stores. So there are mostly 2,500 stores coming in 2 years of the corporates only. So based on that, our inventory will be orders coming from the new stores also and from the existing store also. So we are little bit expanding our wallet share also and supplying the inventory in the old and new store also. So again, if we are not expanding our wallet share, we will be supplying to the opening new store and existing store. From there also the sales will come. So majorly we are relying on the existing stores only. Again, new plants are giving what we have onboarded. They are giving advanced gold business, though that will expand our volume because of the advanced gold.
Okay, sir. That's really helpful. Thank you for your answers. Yeah, and all of this for the upcoming quarter.
Yes, I will add that we are we have opened the Kerala office also, and we are entering into single store, 2 store. Those who have, they are also planning to multiply the stores. They are regional based and they have a very good sales on their region. So we are expecting to come the sales from that also.
Thank you.
Thank you.
The next question comes from the line of Bharat Gianani from Money Control Pro. Please go ahead.
Yes, sir. Good morning. Congratulations for a good set of numbers, and thanks for the opportunity. So first thing, while we have given the revenue guidance, what would be our EBITDA and PAT margin guidance for FY26 and 27?
So we are trying by FY27 we'll be reaching 4.25, 4.5 PAT margin because of the GML in 3 quarters. Some below EBITDA will gain, the interest cost will be saved, And again, our gold metal, the advanced gold business will increase by 2027. This year we are expecting 7.5%. Next year we are expecting 10%. So that will improve our gross margin and EBITDA. But conservatively, we will be at 6.2, 6.3 EBITDA and PAT level at 4.25 by FY27. I'm telling. So in coming 7 quarters.
Oh, great. And sir, on the cash flow side, I understand that we are kind of scaling up the business, so the cash flow is not there at this point of time. But given that whatever strategy you have highlighted, especially of the advanced gold scheme, wherein the working capital will also get reduced, so will we become operating cash flow positive by FY27? What is your estimate on that?
After March, we will be 100% cash flow positive. In 2026 March, we will be negative because we will be short. We will be creating a 200 crore, 10 crore PAT, but we will need 350 crore. So 140 crore short will be there in 2026. But again, 27 we will be cash flow positive after March. So we are sufficiently funded for 2026. Already we have 900 crores of inventory and debtors, which will be, if you see a cycle of 60 days, we are sufficiently funded. So we will not need any funds. But by after 27 March, after we will be cash flow positive.
And so one more question from my side. Can you please explain this scheme of for the export customers buying gold from the Dubai market? So, I mean, just wanted to understand the nitty-gritties of any regulatory thing involved in that, because I mean, buying gold and then can you, I mean, you'll process it in India and then again give it back to the export customer. So, I mean, can you explain the regulatory angle for that? I mean, how is it permissible? How we are going to do that, because that will contribute a significant chunk to the revenues. So, if you can please highlight, how the procedure will work for the Dubai.
India for the export gold. Indian government is very supportive for the export. We are getting export gold from the banks, but they are charging us $4 to $5 premium. Example, today's gold is $3,300, and we are getting it for $3,305. $5 premium is going on. Without duty we have to export it gold. We don't have to use for domestic. We can't use for domestic. There is no problem in there. But in UAE and Singapore, Malaysia, when gold is running at the rate of $3,300, discounts are going on for $10, $15, $12, because Dubai is a free port and many mines gold come there. So that's why customers are willing to pay the making charges, but they are not willing to pay the $15 premium, $5 premium of India, and that discount going in Dubai they are not getting from us. So that's why we are opening an sales office there to secure the orders perfectly, to give a ground level support to the customer. From there we'll serve in Singapore, Malaysia and UAE, all the states. We'll infuse, we infuse 20 crore rupees in UAE Dubai office, and we purchase gold from there. So I will get 32908, not 33008 at a discount rate, and we'll send to India for the job work at the parent company, and we send back the goods to UAE office, and we can sell it. Our gross margin of whatever gross margin I get, but we'll sell at the same rate which is going on in the Dubai rate. So there will be no hit for the gold rates to the customer. That's why they want to increase the quantity with us, because they told us they're paid. So that's why we are opening the office, and we'll procure the gold in Dubai only, and we'll give a job work to the parent company, and goods will come to the Dubai office, and we can sell by our gross margin. The gold rates will be not different because of this discounting going in Dubai.
Okay. So, but all this is like is regulatory compliant, right? Right. So
There's no compliance issue. From India also we can export directly. We are already exporting. The very good support from the Indian government, and they are very much improving the exports and the paperwork and all. There is no problem in that, and there is no problem in the job work also. So just we want to increase our sale and have a good footprint in the UAE center. So if we open the office there, our salesperson will be able to procure more orders and show them the samples and procure more orders, because huge market is there. Because these our corporates like Royal Lucas and Kalyan and all have their offices, have the store there also. They are opening much store in UAE and Singapore and Malaysia, so we can serve them.
Okay. Great, sir. I have a few questions, but I'll come back to this. Thanks a lot. Thank you.
Thank you. The next question comes from the line of Nirvana Laha from Badrinath Holdings. Please go ahead.
Hi, thank you so much for the opportunity. Sir, you mentioned that you plan to scale your volumes from 450 kg this quarter to 580 kg next quarter, if I heard you right. So that's a huge increase, 150 kg per month in just one quarter. So which clients or what orders will drive this increase, sir?
So again, I told you that already our Reliance and Aditya Birla are placing the order. For job work part, I'm telling, carrot lane is increasing every month. And again, our existing clients, we have diversified the set from large corporate, mid corporate, small corporates and all. So all will, because again, you can see the Diwali and Navratri season orders comes in August, September, this quarter. So we will be order back for September for Diwali and all. And seasons are coming for Ganesh Chaturthi and Raksha Bandhan. So season starts from August, and in July we get the order for Navratri, Ganesh Chaturthi. Other states have other festivals in August. So there is a huge season in the industry in August month, September month, November month, December month. That's why we are expecting this sales volume from this quarter. And again, you can see our back 4 quarter also, we have increased the sale quarterly gradually. And this year also we'll be seeing this type of sales. So we have customers new also, and existing customer also will order us. Already they are ordering us.
Sure. Sure. After the festive quarter, do you think you can sustain this kind of 600 kg kind of volume in Q3, Q4?
Yeah, after that wedding season comes in, you can see February, January is the wedding season, and we get the orders in November, December quarter. So we are back with the third quarter is back with totally wedding seasons and all, again many festival and occasions and all, because our Muhurats comes on this season only, on many marriage happen in the winter seasons and all. So we are back with order of marriage season, and again third quarter we are back with the order of Akshaya Tritiya, and again mix of marriage and many days come. India is about 12 months, 12 season, Father's Day, Mother's Day, Valentine's Day. Those are already there. Again wedding season, Navratri, Diwali. So manufacturer is order back anytime except from June month because it's the monsoon season. But again all the months we are order back because customer has to plan their inventory 90 days before. They have to order us, give us order 60 days before. Then we can place the inventory 20-25 days before the store should inventory should enter into the store before the festival.
Sure, sure. Sir, my next question is on Ganna and Gold, the bangles company that we have acquired. But can you tell us the FY25 revenue and EBITDA that this company did?
Yeah.
Hello, Mangesh sir, we are unable to hear you.
Yeah. So I don't have this. Can you come back in 15 minutes? I will tell you. Yeah.
Okay, I will write to you, sir. And with regards to Ganna and Gold, what is the maximum revenue, or how do you see the scale up in volume and revenue for Ganna and Gold this year and next year?
We are expecting this year 60-70 kg per month volume from this. This is total. This will operate on a job work basis model, and from this we will improve our gross margin EBITDA, because totally this company works on job work basis, so we don't have to increase the money, and total advance gold will come in this company.
Okay. And do you need to do any capex in this facility?
No, not needed.
Sorry to interrupt.
Okay, I'll come back in the queue.
Yes, sir. You may follow further. Thank you. The next question comes from the line of Sagar Jethwani from Phillip Capital PMS. Please go ahead.
Yeah, thanks for the opportunity. How much was the revenue from diamond segment and 18 karat gold revenue for the quarter?
So 18 karat was 7%, 7.25%, and the studded was 0.7%. So studded was almost same quarter-on-quarter, but 18 karat rose from 6.5% to 7.25% quarter-on-quarter, and year-on-year it raised from 4% to 7%.
Okay, and when are we commercializing the business with PMG and Kalamandir? You mentioned about Reliance, and is it for all products or only gold as of now?
So this every customer we enter with gold only, because we are expertise in gold jewelry from last 18-20 years. We have started studded jewelry last year only. So we enter with gold only, then we place the diamond jewelry also in the same. So we are entering, I think we are entering with lab-grown diamond in Kalamandir, and again in Reliance with gold only. but carats are different. Aditya Birla is ordering for 18 carat. Reliance is ordering for 22 and 18 both. And Kalamandir, we are entering with lab-grown diamond only.
Okay. This line item of changes in finished goods and working capital on P&L, which is, negative 142 crores. Can you explain this line item? Was it because of the excess demand that led to inventory utilization, or is it because of the less production seen during the quarter?
No. Already, I told that we had orders of exports, and some orders are not dispatched because of the Dubai office opening got delayed by 15-20 days, something, and that's why our inventory was shut up. Now dispatching is going out of the Kerala office also. We opened the office of Kerala. Their order was also there, so we are dispatching for the Kerala. And Dubai office also opening, some 15 days, 20 days delay got happened, so that's why inventory was up. And again, June month's delivery little bit was dispatches happened in July.
No, actually, I was talking about the line item of changes in finished goods and WIP on P&L.
Okay.
It is because of the increase in stock.
Because QIP, you are telling about work in progress and finished goods. Okay.
Right. That is negative 142 crores.
Increase. Stock has increased from March versus June.
Stock has increased from March versus June, no? Yeah. Okay, I will send back to this one, yeah.
Okay. Yeah.
Can you answer? Just a second, my CFO is there.
Hi.
Sure.
Our
Yeah.
stock, which, so this negative of 142 crore is because of the increase in stock in June 2025 versus March quarter per se. And the increased reasons have already been explained by Mangesh sir sometime back.
Okay. And what's the production capacity organic and including subsidiaries? Can you break it down for subsidiaries?
Yeah.
Per month.
What the capacity we have? You want what the capacity we have?
The organic production capacity and breakdown of the subsidiary production capacity per month.
Okay. So 750 is the parent company, and subsidiary is 150 kg. So 1050 kg per month.
Okay, and Ghana and Gold would be how much? I know it's not complete. Yeah.
150 kg per month. That will be added.
Okay. Thanks for the offer. Yeah. All the best.
Thank you. The next question comes from the line of Diya Brijwani from White Whale Partners. Please go ahead.
Hi. Thanks for the opportunity and congrats for a good set of numbers. I had a question on the business model. So X of the advanced gold business, which is about 5%, how do we record our revenues? Is it on a per gram basis, such that we acquire the gold and we charge on a per gram, like a cost plus basis? Or is it like a percentage, let's say 6-7% of the value of gold that we charge?
Charge on percentage basis.
Okay. So you're saying that your gross profit is linked to the gold prices?
Yeah, percentage wise. Yeah.
Okay, got it. And just one question on the gross margin expansion from current levels. Is it that, so I'm just talking of X of the advanced gold business. Is it that exports command a different margin versus domestic? And secondly, is there a difference in gross margin between 18 carat versus 22 carat?
Yeah, madam, it's totally a mix of all these things. So exports also don't have a very exceptional different margin, but there is a better margin of 0.5% in export. But again, 18 carat has a better margin than 20 carat because rose gold, white gold jewelry has a good margin. But 18 carat percentage has increased to 7%. So again, it has also helped us to improve the margin. Again, in 22 carat also, we have launched many lightweight, featherlight, new designs and new verticals, which are creating margins. So blendedly, we are getting the margin from 22 carat also, 18 carat also. from export little bit. And again, advanced gold is a major player, again, because labor charges only be charged from them. So it add up to gross margin and EBITDA. So all the 4 players are there. So we are creating new versions in 20 karat also, because 22 karat rates are up. So we are creating new lightweight. We are we have reduced the weight by 20% itself by the 3D printers and all. So blendedly we are creating the market.
Got it. And just one last question. What would be your wallet share with the anchor customer, and how has it moved in the past 2 years?
So again, we have a wallet share of 5, 6%, 7% in each of the customers. Somewhere 7%, somewhere 5%, somewhere 6%, 7%. So year on year, last 5 years, we were before 5, 7 years, we were at 0.5% or 1%. Before 2 years, we were at, I think, approximately where we are at 5%, we were at 3.5% or something. So we have increased the wallet share also. Now their stores are also expanding. New stores are opening. So we are getting the shares from the new store also. Yeah.
Got it. That's helpful. Thank you.
Thank you. The next question comes from the line of Vijay Chauhan from RHPMS. Please go ahead.
Yeah, thank you for the opportunity. So, can you please explain the progress of the 200 kg per month order that we have received from the outside, like in quarter 2? What will be that contribution, quarter 3, quarter 4? Yeah.
Already we have dispatched 40 kg in this quarter, and we have got the order of more 60 kg, and we are waiting to we want to dispatch it from Dubai office because of the gold prices and all. So already we dispatched 40 kg, 60 kg we have got the order. Approximately we will be exporting 100 kg this quarter, I think, and from next quarter we will be at the run rate of per month 100 kg.
Okay. In quarter 4, will it be like 150 or 200, any chance, like full reach?
They have confirmed us the order to complete it in through 3 quarters. We will be at the run rate of 200 kg, but conservatively you can 150, 125 kg, 100% will be there in 3rd quarter.
Okay. So there is a high probability that we will exceed the 650 kg guidance on the exit price.
We are conservatively at 650 kg only based on the gold and all. So 650 will be our conservative number on the last quarter.
Yeah, that's fine. And this advanced gold, when we get, how is the revenue recognition? Because what I understand, we typically charge 7 to 8% as a making charges. So because the inventory belongs to, because client has purchased gold and given it to us, so we will only record the making charges as a revenue, right?
Yeah.
It will not be like 100 rupees gold we are purchasing and then we are showing 7-8%, right?
No. Yes. So if we charge 7% or 6.5% or 7.5% for the from when we are producing our gold and funding the data and inventory, so in advanced gold we charge for the same product 5.5%, 5.25%, 5.75%, like that we charge. So we give a consideration of 1% or 1.25%. That's why we go with the advanced gold based on the product, based on the vertical, based on the design they want. So, but again, we don't have to fund the inventory and all. So there is a win-win situation for both.
Right. My question is only that will we report 8 rupees as a revenue? Let's say the 8% is the making charges, or we report 100 rupees as a revenue and showcase 92 rupees as COGS, and then 8 rupees will be the gross profit.
We could only, whatever we charge 5.56% as a revenue, or about 6 rupees only as the revenue will be showing that, because that is again advanced gold. So we only revenue will be a 6 rupees, not 106 rupees.
Correct. So it is safe to assume that gross profit will keep increasing because the revenue recognition is because of the accounting practice will change when we increase the advanced gold volume, right?
Yeah. So it will shift as soon as we increase our
advance percentage.
Yeah.
And what will be the interest expense saving because of GML and all other things combining up?
We are expecting it to 0.4 basis to save from the gold metal loan. We are at 1.2 something. Interest rate is 1.2% of the revenue. I think we will be at 0.6 or something. GML will save 0.4 or 0.45 basis.
Okay. And the hedging policy which we are following. Yeah, it's okay. Yeah, I will come back in queue. No problem.
Thank you. Thank you. The next question comes from the line of Darshil Jhaveri from Crown Capital. Please go ahead.
Hello. Hello. Good afternoon, sir. Thank you so much for taking my question. Firstly, congratulations on a great set of results, sir. And a lot of my questions have already been answered. So, sir, just wanted to know, currently, we are already at around 4% PAT, right? 3.9%. So in the current year, because now the volumes will also increase due to operating leverage, can we reach our FY27 PAT goal in the current year only as a percentage, like 4.25, 4.5? Is that a fair assumption, sir?
So we'll be conservatively saying that by FY27 March, we'll be at 4.25 to 4.5 in between that. But it will be a quarter-on-quarter basis, so every quarter will improve by some basis points. So in a long period of 7 quarters, you can see we'll be reaching 4.25 to 4.5.
Oh, okay. Fair enough, sir. And sir, I just wanted to know, our, acquisition of Ganna and Gold, that will start contributing revenue from maybe Q2 or H2 only
Q2
will
only.
start,
August
sir?
and September, it will be contributing. Q2 only.
Okay. So that will also
Yes,
help
sir.
our volume growth. So, and our volume guidance is X of Ganna and Gold, right? That we've given.
Yeah.
Okay. So we have even more scope of growing. And I just want to know, the following up on the previous participant question about job work. So our revenue currently, around of 1131 crore, when we say that, 5% is job work. So, matlab, the job work revenue is as good as profits only, right? Because that's a service charge, right?
Yeah.
So,
So it will directly add up to gross margin.
correct. So it'll directly add up to the gross margin
We are not on the job
only.
work basis. We have started job work, that's why our gross margin also increasing.
Okay. So that will be one of the biggest drivers of our margin expansion because of pure service revenue. Yeah, fair enough, sir. Yeah, that's it from my side. So thank you so much, sir. All the best.
Thank you. The next question comes from the line of Aryaman Iyer from Sovilo Investment Managers. Please go ahead.
Good morning, sir, and congratulations on the good set of results. Just one question from my side. So, in 2020-21, that gold prices fell from 52,000 to 46,000. For us, what is the effect on margins as well as working capital days?
Working capital in COVID, it was in COVID time, I think. So in 2021 was the COVID time. That time 56 to 46 it came by gold. So whenever we are linked with the percentage basis, whenever in the history gold does not fall below 3, 4, 5%. If it is fall of 20% or 50%, we revise our quotation with the customer. Customer also understand that quotation should be revised for 6 months or 12 months whenever gold rate get to normal basis. So I think 2000 was the COVID period and it was a very different period. So I don't remember about 21. But again, our margins are intact with the percentage basis on the gold prices here.
Sir, so purpose of asking this question, so if gold prices do fall, what will be the effect on our working capital days?
So working capital days, I think if gold price falls, though sales gets faster, payments comes faster, so working cycle will be improved much better if gold prices decreases.
Okay, thank you. That's all from me.
Thank you. The next question comes from the line of Nilesh Jain from Astute Investment Management Private Limited. Please go ahead.
Hi, thank you for the opportunity and congratulations on great set of numbers. My first question is, can you give me volume breakup for this quarter by at standalone level and for your 2 subsidiaries?
Yeah, so 60 kg from the subsidiary we have done and approx 340 kg from the parent company.
So I see when because your last year Q1 does not include subsidiary numbers, what I understand. So last year we did 349 kg per month average. So there's some slowdown at the standalone level company. What would be the reason behind it?
So revenue wise we are positive, but it's just a difference of 4 to 5 kg. So in the industry, in the retail sector also, you can see volumes are revenue has everybody has grown. Volumes are somebody has a 2-3% dip or same. or at the same level. So we are at near about the same level at the current company level, and at the level console level, we have grown by 30%, but at the parent company, we are at the same. So total industry, this quarter volumes are same because of the gold rates have increased drastically. So revenue and growth and volumes are the same, yeah, because of the gold rate.
So then, do we understand that, the volume growth which you have shared for the Q2, Q3 and the other quarters, will it be largely led by your subsidiary companies? Or we are expecting even
all the three it will come because gold rate has totally stabilized, and whenever last month quarter only 30% jump came in this quarter. So it will grow in all the three companies.
Okay. Sure. My second question is, when you about you're procuring gold from the Dubai, is it you're getting it on advance from your customers there, or it will be again inventory will be on your books?
No, again, these all large corporates don't give us advance gold other than Reliance, Aditya Birla and Calcin. So they are customer of India only. We are not in international.
Okay.
So we'll get, but their terms are mostly cash and carry or 7 days or 10 days. So our working capital cycle will improve from that.
Okay. My last question is on your export. You mentioned by FY27 you have target of 25% of revenue. What would be for FY26?
So 26 we are targeting it to 17 to 20% or something.
Okay. Sure. Thank you and all the best.
Thank you so much.
Thank you. The next question comes from the line of Manan Vandur from Walford PMS. Please go ahead.
Yes, thank you so much for the opportunity and congratulations on the numbers. So my first question is how much is our receivable currently? Not the days, the amount.
The amount, okay. 397 crore and inventory is 550 crore inventory and 397 crore data set.
394.
394, yes. 397.
397 crores on receivables.
And inventory is 550 crore.
Okay. 550 crores is inventory. Sir, so my question is, how is our receivable still 397? Because I believe that our receivable had increased due to our the Akshaya Tritiya you said. But then now it has come back and our debtor days is normally like 45, 50, 60 days. Even if we count 2 months, still our receivable should go down by a lot. Then it has gone only 50 crores down. So please explain that.
So it is 31 days right now and we were at 38 days. So by days we have improved. So our sales are also improved now. So our sales are improved by 80 crores. So again we, as soon as our sales improve, so inventory also there and data are also there. So we by days you can see we have come up to 38 days to 32 days. So it's a cycle.
Okay, understood. So how do you see our receivable days? Receivable amount go further by the year end?
We told that we are going for advanced gold business, and again the gold waste was up in the March. That's why river waste was gone up, but we have controlled in this quarter also, and coming quarter also it will come down to 25, 26 days. We are confident that it will come down to 25, 26 days.
Okay, and so last question is that there was currently a stake sale of almost around 5% something. So my question was that why did the promoters sell? And we do preferential, but then we also sell our stake. So it will decrease confidence in the shareholders. So can you please explain that?
Yeah, sure. The objective of the transaction was twofold: to enable the promoter to partially monetize their stake. After over 2 decades, we are of building the business and all. We have sold the stake to broaden the institutional participants. So institutions were interested to participate in this. However, there was some unparticipation issue in the execution, which resulted in the intended institutional investor were not able to participate in that. So again, you can see from last 20 years, we are building the business. In 2005, we started. 2020, before 2025, we done a fundraise of 2 times. We given a growth to the company. We done it to fundraise, and we have come up with the good turnovers and sort of numbers and all. So after 20 years, it is between 2-3 promoters. We have sold. Net sale is 4.3, not 5%, because we have taken the warrants also. So it is 4.3 between 3 promoters. So it is, I think after 20 years, we have sold the same. But execution was not properly. I can say that only. Yeah.
Okay. That's it from my side. Thank you so much.
Yeah.
Thank you. The next question comes from the line of Gagandeep Singh from Growmore. Please go ahead.
Hi, sir. Congratulations on great set of numbers. Most of my questions have been answered, so I just wanted to know the guidance which you have given, like of 54,000 CR. Is it on the conservative side or it is on the aggressive side?
So you can say on the midway side, not very conservative, not very aggressive. So so we are on track. We have done already 130 crore, and we are expecting this quarter also a good set of numbers. So every quarter we will increase by 150 crore or something to every quarter. So this is a very decent number, I think, because again, footfalls are very good in the retail side. Rates have settled down, and retail are opening their stores drastically every month. So we are in a very comfortable position to reach that turnover.
Amazing, sir. So my second question would be like the guidance which you have given. Does it include the Ghana, one as well, or it is excluding that?
Excluding Ghana, yeah.
Thank you, sir, and good luck for this year.
Thank you.
Thank you. The next question comes from the line of Ankush Agarwal from Search Capital. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. Just two clarifications. So you said we did 40 kgs of export in Q1. So that is a cumulative number, or it's a monthly average of 40 kg?
No, cumulative. Only April end only we got the order. So we started in May, and we exported in, I think, May end or something. So it's a quarterly number. So we got order in April end.
Okay. And 100 kg would be the monthly run rate for Q2?
Yeah, coming 2 months, we are expecting to deliver 70 kg per month, and third quarter we are expecting to 100 kg.
Okay. The second clarification that I needed was, so when you say the job work or the advanced gold business is 5% of revenues, but on a volume basis it would be much larger, right? Because revenue is just net.
No, we are talking about the volume only. 5% of the volume was job work.
Okay, 5% of the volume was. Okay, got it. Thank you. That was all.
Thank you. The next question comes from the line of Ganesh Rao from Rupani Capital. Please go ahead.
Thank you for the opportunity, sir. I just want to follow up on the previous question on the participant asked. Do you have the numbers of Ghana and Gold, the EBITDA and PAT at the time of acquisition?
You can write to me or IRPR. You can talk to my CFO, so he will give you. So right now we don't have. Yeah.
Okay, sir. Okay. So my first question is regarding the advanced gold model. What are the key enablers or barriers for your existing clients to transition to this format? Have you initiated any of your existing clients to the advanced gold model?
Pardon, you can repeat the question? Sorry. Yeah.
So for the advanced gold model that you're trying to adopt for the new clients, so my question is in regarding to your existing clients, right? So have you started having conversations with your existing clients to move to the advanced gold model?
So in this industry, you can see Tanishq, CaratLane, Mia by Tanishq, Aditya Birla, Reliance, only 3-4 this type of corporates have advanced gold model, and other corporates like large corporates, they work on the basis of they don't want to fund the gold to us, they want to invest the funds in their store only. So they have a policy that manufacturer will increase in the inventory, and so they give us the rate also for that. So that corporate does not work on that model. So different style of working has that. So we are diversified into everybody, mid corporate, large corporate, this Reliance and Aditya Birla and CaratLane also. So we are blendedly doing the business. So every corporate has their own model of working.
Okay, sir. Thank you. My second question is, could you share details on your current gold metal arrangements? Like what is the quantum that is tied up? Who are your banking partners? And what is your current gross debt?
Gross 190 crore already we got the GML approval. So from three bankers, from Federal, Axis and Yes Bank, and now net debt is 3, and what is the gross debt? Net debt is 350 and gross debt is 600 crore something, and net debt is 350. And 190 crore we already got the approvals. So 20% at least we can use.
Okay, sir.
In this,
awesome.
In this order.
Okay. And you had explained this earlier. Sorry if I'm repeating the question, but could you explain, like, if I just look at the standalone growth, it has moderated to 12% year-on-year compared to 50% growth in your previous quarters, right? So if I adjust for exports, right, the growth in the domestic just stands at 7%. So could you help us understand what was the drivers for the slowdown?
So year-on-year, you are talking, we have expanded by 30% on the volume basis. And by revenue basis, we have increased 45%, I think. Year-on-year basis. 56% year-on-year quarter, you can see 56% is the revenue growth, and volume growth is 30%, no? I think. So it's a mix of gold rate and volume. The volume we have grown by 30%, and rate also increased gold rate. That's why we have increased the revenue by 56%.
Sir, but that is consolidated. I'm asking at the standalone growth, sir.
Okay, so you what do you want about the standalone, no?
Yes, sir.
Okay.
Standalone.
So you can call the CFO also for that also if you want. Yeah. So we are number of consolidated. We are holding the number of consolidated. So you can call the CFO. Yeah.
Okay, sir. And last question, more long term, right? Your current market share, as you presented in the presentation, is 0.5%. What is your medium term aspiration, sir? Where do you want your company to be from a market share perspective?
So we are at approximately 1%. We made approximately 5 tons to 6 tons last year. India is making 600 tons of jewelry per month. 650 tons of jewelry. So we have made 5 to 6 tons last year. We are aiming to be at 4-5% stake of India in coming 5 years of 2031-32. So we want to be at 4-5% stake of India. So we are on the good path. Let's see. And we first targeted to achieve 1 ton per month by 2027.
Awesome. Thank you, sir. And sir, one last question, if I can just sneak in quickly. Could you provide some insights on the gross and EBITDA margins difference for a 22 carat and an 18 carat? Right? Assuming the diamond and stone that is used in the jewelry set is the same, what would be the differential, sir, between the two?
Diamond set approximately 12 to 15% gross margin. 18 carat has 8%, 7%, 8%, 9% gross margin. 22 carat has mix of 6, 7, 8. So blendedly, it comes up to 7%. Yeah.
Okay. So the gross margins are lower for the 18 carat, but we
18 carat is higher.
Because
18 carat is higher than 22.
It's higher.
Yeah.
Okay. So the numbers were reversed. So if you just to clarify that again, so for 18 carat, roughly what would be the margin?
We sell at 7%, 8%, 9% also. There are different vertical, different pricing. So we cannot give each perfect pricing, but approximately because of the secrecy level. And again, 22 carat we sell at 5.5%, 6%, 7%, 8%. And again, diamond studded we sell at 12%, 13%, 15% gross margin.
Okay. Okay. Thank you, sir. Those are my questions. Appreciate it, and best of luck.
Thank you. Ladies and gentlemen, in the interest of time, that was the last question. I would now like to hand the conference over to the management for closing comments. Thank you, and over to you, sir.
Thank you so much, everybody. Thanks all of you. And thanks for the shareholder to being with us and for a robust growth ahead. Thank you so much.
Thank you. On behalf of Sky Gold and Diamonds Limited, that concludes this conference. Thank you for joining with us, and you may now disconnect your lines. Thank you.
If you found this video helpful, please like, share, and subscribe for latest upcoming videos.